What if becoming a millionaire wasn't about earning millions of dollars? What if it wasn't about starting a billion-dollar company, getting lucky, or finding some secret investment nobody knows about? What if it started with something much smaller? Just $200 every month. On its own, $200 doesn't sound life-changing, but when you combine that money with something most people underestimate, time becomes incredibly powerful. One invests every month. One keeps saying they'll start later. Imagine two people who are exactly the same. They are both 25 years old. They earn the same income. They have the same opportunities. The only difference is one decision. One person decides to invest $200 every month into an S&P 500 index fund. The other person says, "I'll start when I make more money. I'll start when life gets easier. I'll start when I have extra cash." The problem is that for many people, that perfect moment never arrives. This is Alex. Alex is 25 years old. Alex isn't rich. Alex doesn't have thousands of dollars sitting around waiting to be invested. But Alex understands something important. Wealth is usually not created by one huge decision. It's created by small decisions repeated over a long period of time. So Alex makes a simple commitment. Every month, $200 automatically goes into an S&P 500 investment. At first, that $200 feels noticeable. This is where many people struggle. They look at the number and think, "That's too much. I can't give up that money every month." And sometimes that's true. Everyone's financial situation is different. But for people who can afford it, the biggest challenge is often not the money itself. It's the adjustment. Humans are surprisingly good at adapting. The things that feel difficult at first often become normal after a few months. The question isn't always, "Will I miss this $200 today?" The better question is, "Will my future self appreciate what this $200 became?" The truth is, most people don't become wealthy because they suddenly find a huge amount of money. They build wealth by making consistent choices. Small amounts of money can disappear quickly. A few purchases here, a few subscriptions there, money spent without thinking. But when that same money is invested consistently, it has a completely different purpose. Instead of disappearing, it gets a job. A job where it can potentially grow for decades. Alex chooses to invest in an S&P 500 index fund. But what does that actually mean? The S&P 500 tracks 500 of the largest publicly traded companies in the United States. Instead of trying to guess which single company will succeed, Alex owns a small piece of hundreds of major businesses. Over time, these companies create products, solve problems, and grow. The idea is simple. Rather than trying to predict the future, Alex invests in the overall growth of businesses. The first few years are not exciting. After 1 year, Alex has invested $2,400. After 5 years, Alex has invested $12,000. The progress is real, but it doesn't look impressive yet. And this is exactly where many people quit. They expect investing to change their life overnight. But investing doesn't work like that. The beginning is about building the habit. The biggest advantage Alex has isn't the amount of money invested. It's the amount of time that money has to grow. Years begin to pass. Alex keeps doing the same simple thing. Every month, no matter what is happening in the world, $200 gets invested. There are exciting months where the market rises. There are difficult months where the market falls. But Alex doesn't change the plan. By age 35, Alex has invested $24,000 of their own money. The account has grown, but the biggest change isn't the balance. The biggest change is that investing has become automatic. Alex no longer has to rely on motivation. The system is doing the work, but every investor eventually faces a difficult moment, a market crash. The value of the account drops. The headlines become negative. People start wondering, should I sell? Should I wait until things recover? This is where emotions become the biggest challenge, because investing is easy when everything is going up. The real test comes when things are uncertain. Alex remembers one important thing. The goal was never to become wealthy next month. The goal was to give investments decades to grow. Over history, markets have experienced many difficult periods, recessions, crashes, moments when people believed the market would never recover. But long-term investors understand something important. Short-term drops are part of investing. Alex continues investing the same $200 every month. In fact, when prices are lower, those same contributions can buy more shares. The moments that feel the most uncomfortable can become some of the most important moments for a patient investor. Alex reaches 45 years old. 20 years have passed since the first $200 investment. By this point, Alex has contributed $48,000 of their own money. But something has changed. The account is no longer growing only because of the money Alex adds. The investments themselves are creating growth. This is the power of compound growth. Your money begins earning returns. Those returns create more growth. And over time, the process starts building momentum. At the beginning, Alex's biggest contribution was the $200 every month. But decades later, something different happens. The account starts doing more of the work. The growth from previous years begins to matter more than the new money being added. This is why starting early is such a powerful advantage. Someone who starts at 25 gives their investments 40 years to grow. Someone who waits until 45 gives their investments only 20 years. The difference isn't just 20 years, it's decades of missed compounding. Finally, Alex reaches 65 years old. After investing $200 every month for 40 years, assuming an average annual return of 10%, the account has grown to approximately $1.27 million. Alex personally contributed $96,000. The rest came from years of growth and compounding. There was no lottery ticket, no overnight success, no secret investment. Just a simple decision repeated thousands of times. The most important lesson isn't actually the $1 million. It's understanding that small decisions can create extraordinary results when they are repeated for long enough. Many people look at $200 and think, that won't change my life. And they're right. 1 month probably won't change your life. 1 year probably won't change your life. But 40 years of consistency can completely change your future. The hardest part of investing isn't finding the perfect stock. It's starting. It's staying patient when progress feels slow. It's trusting that the small choices you make today can become something much bigger tomorrow. Your future self will not remember the small things you gave up. They won't remember the purchases you skipped or the moments you chose to save instead of spend. But they will remember the opportunity you created. Because wealth is rarely built from one massive decision. It's built from small decisions, repeated over time. A few $100s today might not feel powerful, but give it enough time, and it can become something you never imagined. If you want to learn more about investing, money, and building wealth over time, subscribe for more videos like this.